Ladies and gentlemen, good afternoon, and thank you for joining us for today's annual general meeting. My name is John Carr. With your permission, I will be your chairman for today's AGM. I would also like to introduce my board colleagues, Richard Glover, chairman of the board, Anne Beresford, and Richard Wilson, who was appointed on the 1st of May this year. I would also like to introduce Will Fraser-Allen, managing partner of Albion Capital. My colleagues have joined via the video link, and hopefully you should be able to see them visually as panelists alongside my picture on your screen. I would also like to reflect on the loss of Jeff Warren, who sadly passed away in January this year. Jeff was a director of the company for over 12 years, and his insights, his knowledge, his experience, and good humour are all sorely missed by the board. The quorum for the annual general meeting is 2 members entitled to vote by proxy or in person. This has been met, and therefore I declare the meeting open. I'm sure you will appreciate that this AGM is under unfamiliar circumstances due to the impact of the coronavirus pandemic, which continues to affect our society. In the light of the government measures in relation to social distancing and public gatherings, this meeting will be convened with the minimum necessary attendees, which is 1 director who is a shareholder and a representative of Albion Capital Group LLP as company secretary. Today's annual general meeting is being broadcast over the internet via a live stream service, which has been set up to give shareholders the opportunity to take some part in the proceedings in these unusual times. I trust you are able to watch the entire presentation without connection issues. However, for those of you that experience issues during this live streamed AGM, you will be able to watch this presentation as it is being recorded and will be uploaded to the Albion Capital website at your leisure. Before I move on, I would just like to say on behalf of the board, I am sorry that the AGM cannot be held from our usual venue, but the safety of our shareholders and keeping in line with the government guidelines was the key reason the board used this approach for the AGM. Separately, the company's articles of association do not permit an AGM to be held by virtual video and audio functionality. However, the government have recognised that companies have to hold general meetings and have brought in temporary legislation to allow companies to hold meetings virtually to allow shareholders to participate. The board has decided to allow live questions to be asked by shareholders and to have a presentation from the manager. However, the voting on the resolutions in the formal business of the meeting will be limited to the shareholders in attendance and the proxy votes we received. Nonetheless, you will note from Resolution 13, the board is proposing to change the Articles of Association to allow for virtual and hybrid meetings to be held in future, which will allow continued shareholder engagement. With this in mind, Richard Glover, chairman of the board, will be taking live questions shortly, but ahead of that section of the meeting, please may I ask that you use the Zoom Q&A function to send your questions through now. Before I continue with the normal course of business, I would like to take this opportunity to thank shareholders for sending their questions and answers through to the new chairman email address. A comprehensive question and answer schedule will be posted on the Albion website after the AGM. Before we start on the formal agenda, there will be a presentation from Will Fraser-Allen, managing partner of Albion Capital.
A very good afternoon to all shareholders at this virtual AGM for Albion Venture Capital Trust. If I may, I'd like to take you through my presentation where I will consider the results for the year that ended in 31st of March. I'm very sorry that I can't be with you and present to you in person. Such are the requirements of the government rules around what we can and we can't do in this lockdown. However, hopefully I'll be able to go through the various areas of interest to you, and anything that I miss, please do feel free to pick up via the questions facility on Zoom, and hopefully we can pick that up when Richard Glover runs the Q&A. Next slide, please. So the plan for my presentation is to go through the financial highlights I will touch on the impact of COVID, as I know many of you will be wondering how we are weathering the unusual times that we're in. Touching on longer term performance, the portfolio, to pick out some highlights and some exits that we've made during the year. I will touch on the new dividend policy that was announced in the annual report in the chairman's statement. And then I'll end by talking about some prospects, the prospects going forward. Next slide, please. So the NAV of the fund at the end of the year was 70.13p. Unsurprisingly, given the difficult times in which we live, due to the impact of COVID, we did suffer a loss for the year of 4.1p, and I'll talk you through that in more detail in the upcoming slides. However, the long-term shareholder return is good at £2.29p, and we were able to pay a tax-free dividend of 5p in the year, which does represent a 7.69% yield. But I will talk to you about how that how the dividend is likely to change going forward shortly. Next slide, please. So COVID-19 did have an impact. When we produced these results, it was in the early weeks of April, when, as you'll recall, life was really very gloomy, and we had to, in very short order, take a view of where we thought that portfolio, what the impact on the portfolio was. That did give rise to the 5% loss that I've described. What gave rise to that was two areas of the portfolio which were most exposed in light of COVID. The care homes. You will recall that the care homes generally had a very tough time in the early days of this crisis, and at the time we produced those numbers, we did in fact have a few cases within care homes. Fortunately, we don't as we are today, and in fact, our operator of the care homes has done a fantastic job in terms of looking after frail and vulnerable people in this really challenging circumstances. And we have benefited from the fact that the care homes are high-end, modern, with very good facilities, and all the procedures in place to minimise the risk to those individuals. The hotel at Stansted, you'll be unsurprised to hear, really has had a tough time. The airport was to all intents and purposes closed, other than for a very small amount of air travel. The hotel itself actually was physically closed until the 4th of July, which had a fairly dramatic impact with revenues of zero. As a result of that, we have had to substantially write down that investment, and we will monitor closely how that performs as things open up. But clearly, things are still very difficult, particularly with the most recent news around quarantining for those coming back from both Spain and France. On the positive, however, the portfolio of renewable energy assets, which you'll recall are wind, solar, and hydro, proved to be very resilient and were effectively unaffected by COVID. We also held a significant amount of cash following a number of exits last year, which I'll talk about in a bit. In fact, had some 30% of the NAV of the fund was in cash. So the combination of those factors meant that the impact could have been an awful lot worse. And as has just been announced to the market shortly before this meeting, we have in fact seen an improvement in the valuation of the portfolio by 1.68p in the last quarter. That's a 2.4% increase, largely as a result of improved valuations of care homes generally. Next slide, please. In terms of the track record, this slide gives you the track record as presented in the annual report to March, but also updates it for June for the numbers that have just been announced. So the 12-month loss of 4.9% has improved to 3.2%, and the longer-term performance continues to be good. To June, 5-year return being just under 34% and just under 50% for 10 years. Next slide, please. Longer term performance. So we look at the long-term performance against the FTSE All Share Index as a proxy for a general savings product. And as you'll see, we've broadly tracked it. We are a little bit below it, but not by much. Next slide, please. So what does the investment portfolio look like? Historically, the fund was very much focused on asset-based investments, examples being the care homes, schools, and historically pubs. But with the change in the VCT rules over recent years, the investment strategy of the fund has moved to backing growth in innovative companies. So there is a gentle move from asset-based investments as they get sold and exited into growth, and you'll see that happening with growth and technology moving from 3% at the last year up to 9% more. You should expect that to continue to grow as we reinvest the substantial cash balances as a result of the exits that we'll talk about. Renewable energy sits at 14% of the fund, and the other big area is healthcare at 37%, which is almost entirely the care homes. Next slide, please. Looking at the portfolio in a different way, our core job is to make sure that we have diversification across the portfolio, and that's by sector that we've discussed on the previous slide, but it's also looking at the stage of the investments, how mature are the companies. The argument being this, that more mature businesses should be less volatile than younger. We look at that really in terms of revenue. So we define early stage as less than £1 million of revenue, and that is still sitting at 10% as it was last year. So the balance of the portfolio being the 90% are all in portfolios, are all in companies with revenues of more than £1 million. And indeed, as the slide shows, we've got some 30% in over 5 million. Looking at another way in terms of numbers of employees to give a sense of scale of these businesses, very young businesses tend to have few employees. So those with under 20 represents only 4% of the portfolio, and so some nearly 70% has more than 50 employees, really giving you a sense that yes, there is some early stage companies in the portfolio, but they are being balanced by these businesses as they grow and become more mature. Next slide, please. So what drove the underlying results for the year? We raised money in the year, so we raised 6 million, slightly a lower amount than last year to reflect the fact that we were anticipating exits, and those exits on 12.3 million were significantly up on the prior year, which has flowed through to cash. And that was the sale of our hotel near Heathrow, which was called the Stanwell Hotel. It was the sale of our very successful school at Twickenham, and the sale of our 45 pub estate. That's been a very long-term and productive investment for us. In terms of new investments, an important part of our job is to make new investments. We upped that significantly in the year to 5.1 million compared to 2 prior. And that was into 8 new companies, as well as some of the existing portfolio. Share buybacks were up 1.9 million against 1.3, and we paid the dividend of 5p, which cost the company 4.7 million, which was up on the prior year due to the more shares being in issue. Next slide, please. So the key value drivers on the downside was the care homes, and that was a reduction in the third-party values. All our assets are valued by third parties. Around the time the valuation was done, which was very early in sort of late March, early April, they were taking a very negative view of the sector. Their view has rather improved, which, as we discussed, our hotel again was heavily impacted by the effective closure of the airport, and we had a little bit of an uplift from the sale of the Bravo Inns. That was where the proceeds were slightly above the valuation. And then if you look in the annual report, you'll see a description of all the other ups and downs. which is across, they're across many investments, too numerous to go through here, but detailed in the report and accounts. Next slide, please. So we did have a very successful year on exits. The highlight being the sale of our school, Radnor House in Twickenham. This was a school we started from scratch, and we were delighted with its progress as it became a really fine, a very good school indeed, providing an excellent education, and was therefore also delivered an extremely good return for this fund at about 3.75 times our cost. Our pubs generated significant interest over the course of the investment, and generated proceeds of 1.7 million in the year under review. Stanmore Hotel was a rather more difficult investment. It never really lived up to our expectations. It struggled to make a name for itself. So to be able to sell it at only a small loss of 0.9 times cost was a relief, but clearly not one of our finest investments. Next slide, please. The chairman's statement gives more detail of a new dividend policy that's been introduced by the board. And this is really acknowledging the world we live in. There is a huge amount of volatility, both as we're seeing from the impact of such things as COVID, but also the fact that we are now investing in unquoted smaller companies, which are likely to be more volatile than the historic asset-based. So what we're trying to do is to make sure that the dividend is appropriate for the NAV at the time. So we're moving to a variable dividend rather than the fixed dividend previously. So what this avoids is an unsustainably high dividend if NAV falls. But equally well, if NAV rises, it more immediately rewards shareholders because the revised dividend would be calculated upwards. The target yield is around 5%, and the actual mechanics of calculating the dividends is that each half year we will calculate the dividend as 2.5% of the prevailing NAV, i.e. the one that has been most recently announced, but with the aim to broadly give you a 5% yield, which we consider to be the right yield, the right level of yield and the sustainable yield, given the nature of the investment strategy and the assets that are held by the VCT. Next slide, please. The investment strategy is worth reminding everyone of as we move into more growth and innovation. So we invest both at an early stage, which we call seed, through to more established businesses, which is Series A. And between those two extremes, there's what is known as Series A, which is our sort of sweet spot, if you like, where we're particularly keen to make investments. So these are companies that probably have at least $1 million of revenue, probably more, but more importantly, they have a product that has been developed, they have a market that's been established, and they have a route to that market. In terms of sectors that we are focusing on, will not be a surprise to you given where the world is going. Enterprise software, if there's never been a greater demonstration of the importance of software than the current crisis, which has led us all, so many people, to be working from home. So areas around cybersecurity, an increasing problem, huge move to digital marketing. The concept of going to trade shows and exhibitions has just sort of disappeared overnight, and the growth in the requirement for companies to market themselves digitally has never been greater. And inevitably, all these activities give rise to a huge explosion in the data that enterprises have to manage. And with that explosion of data becomes the complexity of how do we analyze that data? How do we use that data more effectively to make decisions? Hence why data analytics has become a core area for our investment activities. And then finally, fintech. The prevalence of software platforms to support the mobile phones that we carry, the tablets that we have at home, the laptops that we sit in front of, means that there's been a huge move in terms of financial services businesses having to introduce software to operate in this new world. Healthcare has always been a core focus. In this particular VCT, that has historically been in care homes, but elsewhere within the Albion VCTs, we've been investing in other areas of healthcare. So this again would be software to make healthcare more efficient. And we do like the whole area of specialist pharmaceuticals. So this is often repurposing drugs to make them more effective, for example, in the treatment of children. And then the other hugely important area is as individuals, healthcare needs become so much more complex, is to improve the whole area of diagnostics. So these are diagnostics to help manage an increasingly complex healthcare population. And then beyond that, the area of automation. How do we make enterprises more effective, more efficient? Software does provide that opportunity, but so do specialist sensors and other ways that we can automate processes. So the focus going forward is very much in the area of business software, covering those subsectors, but also technology-enabled services generally, and then the broader area of healthcare. What we are looking to do, however, is to minimise our exposure to consumer-facing businesses, which are more prone to economic cycles and indeed have proved themselves to be very prone to a healthcare pandemic. So you can expect us to be relatively to have relatively little exposure to that consumer cycle, preferring the more stable areas of business to business and the typically recurring revenues that B2B software provide. We were encouraged to be recognised as the Best Generous VCT at this year's Tax Efficient Awards. Always nice to be recognised by our peers. Next slide, please. A couple of examples of new investments. So Speechmatics was an investment we made in the year. This is a very clever software platform in the area of speech recognition. So effectively, it's able to recognise speech in 29 languages. Indeed, it's in fact now 30 due to a new language recently being added. What that does is it takes the spoken word and transcribes it into text, which has huge applications, whether that might be in call centres, but also really interestingly in the whole area of Internet of Things, where devices need to be able to be operated through speech. So one of the interesting areas they're working is to have that speech recognition on really quite small devices. The business was founded by Tony Robinson, who is very much the grandfather of this industry. So an exciting business, and importantly, and this is important, it is in a huge market. So we believe that the automated speech recognition market is worth some $7.5 billion. Next slide, please. Picking up a few of the other investments, Clear Review is a software business who's specifically looking at how you manage your employees in terms of providing continuous appraisals. Elliptic was within our sort of fintech focus, and looks at the whole area of anti-money laundering in the world of crypto assets, a growing area. And then Limitless is a great example of how the world is changing in terms of providing customer service, which historically would have been done in physical care homes with lots of people sitting on the end of headsets. And what this does is actually provide customer service using the crowd. So what that means is you get ambassadors. These are often really dedicated customers who, from the comfort of their own homes, provide customer service online. So effectively, they earn money for doing it, but more importantly, the customers that are looking for help get really good customer service from incredibly committed other users. And effectively, the idea is that you can bring down the whole, the requirement to have expensive physical call centers and all the staff costs and infrastructure costs that go with it. Next slide, please. So Amandra is an example of a software testing business specifically looking at the whole area of algorithms, hugely important in terms of financial services in their trading platforms, but will increasingly become important as algorithms drive the world. I mean, autonomous vehicles is a good example of where testing algorithms is absolutely critical from a safety point of view. Credit kudos, bottom left, is a new way of looking at credit ratings. So what it does is it allows the automation of people's credit histories through looking at their underlying banking records and automating that whole area of lenders making decisions about the creditworthiness of their potential new customers and ongoing customers. Consiris is helping insurance company understand and price risk better. So it's a software platform providing models around pricing of risk. And then Symmetrica is a company which has designs and manufactures radiation detection equipment. So this is all around the risk of dirty bombs in areas such as ports, for example, or over bridges. Next slide, please. So what are the prospects for the VCT going forward? In terms of where it's going, as I've alluded to in earlier slides, the portfolio is focused on very long-term growth trends, whether that be healthcare in terms of both the existing care home portfolio, but also in terms of new investments in both software and diagnostics. Software is very much what is driving such huge change in the world, as well as the need to manage that data. Our schools are still very important. Education will continue to be important, and our renewable energy portfolio will continue to generate sustainable energy. Never has there been greater focus globally on how we generate energy, and to do that in a green and sustainable way. Importantly, we will look to reduce and minimize our exposure to consumer spend. Next slide, please. So as we move forward, we feel that we've got a better feel now on the sort of immediate impact of COVID-19, and are encouraged by the upward tick in the valuation of the NAV valuation of the fund. That's not to say the world isn't going to be difficult. The extent of the economic impact is still very uncertain, and a significant recession is inevitable. But by focusing in on the areas that we do focus on, we believe we are well placed in terms of weathering that COVID world that we find ourselves in. In terms of investment activity, we will be focusing in on new investments, reflecting the high level of cash that we have, but we will also be supporting the existing portfolio as they grow, which is very much our strategy to support our companies over successive funding rounds as we get comfortable with their growth prospects and as they thrive and prosper. We do think resilient growth is achievable within the software portfolio, and have been encouraged to see the portfolio even in the relatively short time since lockdown. This growth of our schools will be slower. Clearly the schools effectively had to move to a completely remote provision, and whilst the hope is very much that all the children will be back in September, realistically in times of recession, the growth of fee-paying schools will be more limited. However, we are still comfortable that they are good assets in the long term. We shouldn't forget that there are companies thriving in our portfolio, and it is by no means all doom and gloom, but we must be very, very cognizant of the world in which we live and react to the events as they unfold. The first dividend of 2.5p has been paid on 31st of July, so you should all have had that. And just to highlight that was paid under the old target dividend policy of 5p. Obviously, going forward for the second dividend in the year, it will be calculated under the new policy, which will be 2.5p of the NAV as announced at the half year. The half year being ending in September, and then the results will be later announced a couple of months later. So all in all, cause for optimism. However, equally well, we need to be cognizant of the world we live in. We are optimistic. We will go forward. And I very much look forward to reporting to you in a year's time on our progress. Thank you for listening to this portfolio, listening to this presentation in this rather unusual means that we've done it. And it remains for me to say thank you for listening. I wish you all the very best of health and that everybody is weathering and surviving the world that we live in. Thank you very much indeed.
Well, Will, thank you very much indeed for an excellent run through. Now, as I indicated earlier, the board would like to use this forum to take some of your questions. Bishop Glover will now endeavour to answer them, and if necessary, with help from the rest of the board or from Will Fraser-Allen.
Thank you, John, and thank you, Will. Very, very good, very comprehensive report, and not necessarily as gloomy as perhaps one might have thought when the whole pandemic started a few months ago. We have a number of questions. We've got nearly 100 people in the room, which I think is very impressive for a virtual AGM. But we got a number of questions, both submitted before and submitted now. Not surprisingly, there's quite a COVID flavour to them. Will, there's one which asks about whether actually the coronavirus has provided new opportunities and new ideas. How would you like to respond to that?
Thank you, Richard. I mean, absolutely. I mean, we as investors thrive in times of great change, and the rate of change over the last few months has been absolutely staggering, not least of which the way we operate. So, the whole move to working at home, the requirement for proper IT infrastructure clearly very much plays into the sweet spot of our focus on software. So we do believe, and we are indeed seeing some very interesting opportunities around some of the areas I described in my presentation, but the obvious ones being the areas of cybersecurity, managing data, and providing collaboration tools for people to operate on. I think the other big area is healthcare. So remote medicine has been the big theme. I'm sure many people on this call will have seen this huge jump from being unable to attend clinics, hospitals and the like, and so much of the sort of diagnosis and consultations are now being done online. And we are seeing a number of opportunities for platforms that make that more easier to do. So not in this fund, but elsewhere. Historically, we have investments in platforms that look after the mental, the well-being, the well-being of children in this difficult time. But also we have another platform that looks after the dietary requirements and helps dietitians look after people, particularly with, say, diabetes. So there will be opportunities. Times of change is good for a venture capitalist. It is points of change that we have the opportunity to make really interesting investments.
Okay, thanks, Will. A related question comes with a compliment to the manager, actually, about well-timed exits from some of the asset-based investments like pubs and hotels and Twickenham. The question is about, do you expect any further COVID-related markdowns in the value of the assessment, of the portfolio, or conversely, do you think that most of the downside has already happened?
So as I say here today, and really in line with the presentation I just gave, I don't anticipate any significant write-down. So the care homes, we've actually seen the third-party valuations improve, really because care homes have proved to be, particularly at the end of the market, where ours have proved to be robust and have done a really fantastic job. The asker of the question makes a good point, and whilst I take no pleasure in the huge challenges being faced by the leisure sector, particularly the pubs, our sale of the Bravo pubs has proved to be fortuitous. Elsewhere within the portfolio, I think the schools, I don't anticipate increases in valuations until really you can start increasing pupil numbers, particularly while there's one of them can't see any reasons for reduction. So those are the significant bits. The hotel we've heavily written down already, and that is very much on the watch list as I've discussed. But, you know, the airport is open. People are starting to travel again, and we remain optimistic. And that's really the sort of probably the bits of the portfolio that are most, from an asset base side, that are most exposed. We do have a small investment in a wedding venue, which is still currently closed, but equally well, its costs are very low indeed, as with our staff. And we are hopeful that in due course weddings will resume.
Very good, thank you. And then just a quick specific, I think you've dealt with most of the COVID implications, but a specific about whether it's had an impact on the numbers of applicants for the new school year in Sevenoaks.
We encouragingly, we have taken on new pupils during COVID, and that was really people looking to the effectively remote at-home schooling, which they did a great job on. It's still currently unclear where we'll end up, but I think it's safe to say there won't be huge growth in terms of pupil numbers, unsurprisingly.
Okay, thanks. Now we've had a question which probably is on the minds of most shareholders: how sustainable are dividends going forward? And I think probably it's fair for me to say on behalf of the board that we're very clear about the importance of dividends to shareholders. And therefore, you know, it very much remains our intention to continue to pay regular dividends as far as liquidity allows. You know, there is obviously an uncertainty at the moment, which the current pandemic creates. We know that the whole business of investing in small, unquoted growth companies is volatile, and that is why, as we'll explain, we've moved to a different dividend policy, which allows us to avoid unsustainably high dividends if the net asset value fails, and conversely to allow shareholders to benefit more if the net asset value rises. We've had a question about how the Albion team itself is evolving given the developing investment strategy and the focus on B2B software. So can you give us some thoughts on the team itself, Will?
Absolutely. So there's clearly a big move in terms of where investment is focused into the world of healthcare and software. Now it's worth just sort of reflecting on the sort of history of Albion for a moment, in that we, although not in this particular VCD, we have actually been investing in growth companies for a long time. So we were actually investing in software as early as 2001. So with the change in rules, it wasn't a complete change in skill set required. We had the skill set within the business. What we have done, however, is to reflect the greater focus and the requirement to invest more in that space, is we have significantly grown what we call the tech and healthcare team. And we've done that we've recruited three. We recruited 3 at the investment manager level, 2 at investment associates, who in fact have now done very well in their first 2 years and have recently been promoted. So we've effectively increased the team by 5, who are now all investment managers, highly productive, making new investments. And that's in addition to the partners, 5 or so partners that are focused on software and healthcare. So we now do have a very significant healthcare and tech team focused on originating, transacting new investments in the space. And through the brand Albion VC, which is effectively our technology investment arm, we do believe we are building a very credible proposition for the entrepreneurs and the founders who are critical, because it's the fantastic companies that they build that give rise to great investments for you as shareholders.
Right, thank you. Got a couple of questions here about disposals. There's a general question. Is it the intention to gradually sell all the fixed asset investments? And a more specific question about disposing the renewable energy portfolio in the short to medium terms. Any plans on that? This questioner suspects that most shareholders would prefer if we hung on to these valuable investments for the long term. But any thoughts on disposals generally, Will, and/or in the renewable energy sector?
Yeah, so the strategy has to be that over time the asset-based portfolio reduces and is replaced, and that is simply the feature of the fact that we are backing entrepreneurs and founders, partners to build these businesses who have an exit intention in time. So you will see the asset-based portfolio reduce and be replaced by growth, innovation growth. And turning to the renewables, that is a slightly different position because they are more sort of physical assets where there is more ability to hold them. So at the moment, there is no particular desire or intention to exit those. So I think one might consider those fairly long-term holds. In terms of the other assets, there's very much a discussion and by agreement with the people that operate them with us. It's not complete. It's never completely in our control.
Very good, thank you. We've also had a question about the board's view on directors' tenure over 9 years, and I think it's important just to emphasise that this board doesn't consider that a director's length of service necessarily reduces his or her ability to act independently, and so we are not looking to invoke or introduce a set policy for limiting tenure. We're a board of seeming contraries, but there are one member of the board, John, has been with us for longer than 9 years. The rest of us can't muster 9 years between us, so we have a relatively broad spread. But certainly, as far as John is concerned, we are absolutely happy with the fact that he continues to provide independent advice and that we continue to benefit from John's experience. So no change planned from us on that. Will, a question about the change in broker. Would you like to comment on the reasons behind going from Winterflood to Panmure Gordon?
Yes, indeed. So Panmure Gordon are very much the market leader in the provision of both market making and corporate broking services to the VCT industry. In fact, they provide services to the vast majority. So for some time we've considered whether it would be appropriate to move to them, and it came at a time when Winterfloods were looking at their own activities, and given that we were effectively, I think, their only VTT clients, it became a sensible and a mutually agreed position that we moved to Panmure Gordon's, having had fantastic service from Winterfloods for a great many years. So it was really a natural evolution of the fact that Panmure Gordon is very much the market leader at a time when Winterfloods were looking at their own activities, and it was a fairly sensible move for us to go to them to make that move, and it's gone very well. They've done a great job in the short time they've been operating for us, and they also, as well as providing market making services, they do provide the board with corporate broking services too, which is just helpful additional advice.
Thank you. We've got one other question here, which I think it's crystal ball time for you, Will. Do you anticipate any further changes in VCT investment rules? And if so, what would be your best guess about how they're going to develop?
So that really is crystal ball gazing. I think the way to answer that is our VCT is doing a good job, because ultimately, a very big stakeholder, arguably the largest stakeholder in VCTs, is Her Majesty's Treasury through the tax break, both the 30% upfront tax break, but also the ongoing tax-free income, makes Treasury a hugely important stakeholder. So making sure the job we do meets their broader policy needs is really important. And how do we measure? How do I measure that? Well, I really look at what they've asked us to do. They've asked us to back growing innovative businesses, and that was what all the rule changes were around. And I hope my presentation has really demonstrated to you just the lengths to which we are going to fulfil that broad policy objective of Treasury. I think also the current COVID situation is going to give rise to a massive requirement for SMEs in this country to raise money for a whole host of reasons. And the VCT industry, it's now a very significant industry, looking after many billions of funds, is extremely well placed to be part of the solution to the huge difficulties that many SMEs are going to face. And where is our economic growth going to come from? I'm going to mention the dreaded B word. Post Brexit, we will be looking at, the UK will be looking at how we trade globally. There is no better example of companies able to trade globally, software businesses and healthcare businesses. So I think my view is that the VCs are doing what they're asked to do. I do believe Treasury recognise that, and I do believe they're very supportive of what we do. So I remain optimistic that there aren't any changes on the horizon. I've heard nothing to suggest that there are.
We'll all look back in a year's time and see whether you were right, Will. So one final question, I think, is the last one that I see here at the moment, is about fundraising. Will we be raising funds this year?
So far, we've made no recommendation to the board yet. As you know, this fund has significant cash balances, so raising new money is probably not top of its priority. But to be clear, that we have not yet gone through a process of recommending to or not doing a fundraising. That will come later in the year. Looking more broadly across the Albion stable, one can expect some fundraising. There will be some fundraising amongst the stable, probably at the it'll be late in the last quarter of the year, possibly in the new year. But it's very much decisions that have not yet been made and will be subject to recommendations by us to the board, and the board make it and deciding to whether to go with those recommendations. So the answer, simple answer is no firm news at this stage, Richard.
Very good. Well, I think that concludes the list of questions that we were going to address, or that we've had at this posted at this meeting. So without further ado, thank you, Will, in particular, for your responses. Thank everybody for their questions. And back to the chairman of the meeting, John Carr.
Okay, well, I reiterate that point. Thanks to everyone who's given those questions, and thanks also to you, Richard, and Will, for your responses. So I will now proceed with the formal business of the AGM. The notice convening the AGM has been in your hands for the statutory period. With your permission, I will take the notice as read. There have been no questions from shareholders on the AGM resolutions, and therefore I will proceed. I would like to take time to note that as there are only 2 shareholders present in the office, it will be only those 2 shareholders who are permitted to vote in person. The rest of the board will be unable to vote as they are not at the place of meeting. However, you will see the proxy votes we have received displayed on your screen, and that the majority of shareholders have remotely voted in favour of the board's proposed resolutions. The first item on the agenda is to receive and adopt the company's accounts for the year ended 31st of March 2020, together with a strategic report and the reports of the directors and the auditor. Those in favour? Thank you. Those against? Thank you. With your permission, I do not intend to read out the proxy votes after every resolution, but I will show them on the screen as each resolution comes up. Does anyone object to this arrangement? Very good. I declare the resolution carried. The next item on the agenda is to approve the directors' remuneration policy. Those in favour? Those against? Thank you. I declare the resolution carried. The next item on the agenda is to approve the directors' remuneration report for the year ended 31st of March 2020. Those in favour? Those against? Thank you. I declare the resolution carried. The next item on the agenda is the re-election of Richard Glover as a director of the company, and I have pleasure in proposing Richard for re-election. Those in favour? Those against? Thank you. I declare the resolution carried. Now for the next resolution, I would like to pass the chair to my co-director, Richard Glover.
On the next item on, the next item on the agenda is indeed the re-election of John Carr, and I'm very happy to propose John for re-election. Those in favour? Those against? Thank you. I declare the resolution carried, and back to you, John.
Thank you, Richard. The next item on the agenda is the re-election of Anne Beresford as a director of the company, and I have pleasure in proposing Anne for re-election. Those in favour? Those against? Thank you. I declare the resolution carried. The next item on the agenda is the election of Richard Wilson as a director of the company, and I have much pleasure in proposing Richard for election. Those in favour? Thank you. Those against? Thank you. I declare the resolution carried. I now propose the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of this meeting to the conclusion of the next meeting at which accounts are to be laid. Those in favour? Those against? Thank you. I declare the resolution carried. The next item on the agenda is to authorise the directors to agree the auditor's remuneration. Those in favour? Those against? Thank you. I declare the resolution carried. The next item to consider is to allow the directors to allot shares. Those in favour? Those against? Thank you. I declare the resolution carried. The next item is to be considered as a special resolution that the directors be empowered to disapply preemption rights. Those in favour? Those against? Thank you. I declare the resolution carried. The next item, which is again being proposed as a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Those in favour? Those against? Thank you. I declare the resolution carried. The next item, which I mentioned earlier, and again is being proposed as a special resolution, is to amend the company articles of association to enable the company to hold general meetings either wholly or partly by electronic means. Those in favour? Those against? Thank you. I declare the resolution carried. That concludes the formal business of the annual general meeting. So thank you to all shareholders who have joined this live streaming of the AGM. As noted earlier, the board welcomes any feedback you may have, which you can do by sending an email to aavcchair@albion.capital. That's aavcchair@albion.capital. And for those of you who are interested in seeing the full list of questions and their corresponding answers, these will be available within 24 hours on the Albion Capital website. So many thanks to you all for attending, and I hope you all stay well and safe.